Hello everybody, it's Evan Clementino here from C and today I'm going to answer one simple question for you, and that is, why does the profit number on my profit and loss statement not match the amount of money that's in my bank account? It's really common around this time of year. You've received your profit and loss statement from your accountant, you're looking at your bank account balance, and they're out of whack. Either you have way more cash in the account than it says you've made a profit, or it's the other way around. It says you're raking in the dough profit-wise, but your cash just isn't in the account. Where did it go? So I want to break down how this relates to the profit and loss statement, and also how profit and profitability is different from understanding your cash flow and the cash on hand. There's a couple items in the financial reporting or the accounting framework that are going to throw off your profitability balance compared to your cash flow. And the first one is your accounts payable and accounts receivable. Now, those accounts aren't explicitly listed on the profit and loss statement because they're on the balance sheet, but let me explain what they are. Accounts receivable is money that you are due to receive for services that you've provided, but you haven't actually been paid for them yet. Those show up as sales on the profit and loss statement, even though you haven't actually made that money yet. And the same goes for your expenses. If you, let's say you buy expenses from a supplier and you have 90-day payment terms, well, the expenses recorded when you received that product that you've purchased or that item that you've purchased, not when you make the transaction to buy it. So right there, your profit and loss is going to reflect the committed costs or the committed revenues, not necessarily the actual transactional value of them. The second item, and it's one that I've mentioned tons of times on the channel here, and that is asset purchases. When you spend money on an asset, that expense doesn't get reflected in your profitability in that specific year. Part of it does, but it also gets expensed for the life of the asset. So every year for the next however many years, there's going to be a small expense item taking a proportion of the value of that expense that you've paid. This is called depreciation. You cannot expense the full cost of that asset in the year that you buy it, which means your profitability is going to be a little bit higher, which means you're going to pay just a little bit more in taxes in that year. The third item is truck payments, and this kind of falls into the same category as the asset purchases, but the assumption here is that you purchase your truck with loan financing. So the purchase of the truck, the original purchase of the full value of the truck, is the asset purchase that is depreciated over the lifetime of the asset, as I just explained. But the actual financing payments, the truck payments that you make bi-weekly, do not show up in your profitability. So that right there is probably a big one for you being a contractor, because you recognize the amount of money that you're spending every 2 weeks on your truck or any equipment leases that you have, and those are not reflected in your profitability. So you might be asking, what's the point of doing all this calculation for profit and loss when it doesn't actually reflect my cash flow? And that's the whole purpose of what I want to explain to you today, is the relationship between the two and also what's best for you. So the whole reason the profit and loss exists is because it gives us, in the accounting world, an objective framework for filing taxes and reporting the financial progress of businesses, but also a framework for comparison. Allows us to compare apples to apples instead of looking at businesses with widely different reporting standards. But keep in mind that the profit and loss and the balance sheet are accounting forms. They are accounting reports, and they aren't necessarily designed with the owner's best interest in mind. They're not necessarily designed for the strategic people who have to make decisions based off the financials. And that's where a construction-specific bookkeeper can come in and help you, because they can be that gap between the accounting world and all the financial statements that are generated here and your day-to-day world, your operational world, and what you need to know to grow your business and get your jobs done. There is a financial statement that can help you understand your cash flow, and it's literally called the statement of cash flows. You might have not seen it from your accountant, because they usually only send you the balance sheet and the income statement, but the statement of cash flows will help you as the operator understand the nature of your cash. So essentially, it'll take the cash on hand, like what's in your checking account as of the start of the period, and then it'll add your profits to that cash, and then it'll add and subtract different cash flow transactions that were left out of the profit and loss calculation, to give you a present day cash balance, a cash on hand balance that will accurately reflect the amount of money that's in your bank account. If you're interested in understanding the total flow of your money from the start of the period to the end of the period, you have to really use your profit and loss in conjunction with your statement of cash flows to get a view of the full picture. But I'm not here telling you that you need to go dive into more accounting reports, that you need to go learn how to read all these financial statements. That's what I'm here for. And I'm interested in helping digest that information for you, giving it to you in a nice, simple visual report that just shows you exactly what you need to know to make the decisions that you need to make today that help you grow your business, help take time off your hands, help take stress out of your mind, and help deliver clarity to your day-to-day life and your operations. There you have it. That's a quick and dirty explanation of why your profit doesn't equal the cash in your bank account. If you're interested in exploring this for your business, give me a call, shoot me a message, and we can discuss ways to go about looking at the financials for your business and getting you set up with a bookkeeping system that actually delivers results instead of just being an unnecessary and not very helpful expense to your business. That's all I have for now. Thanks for watching, guys. Subscribe for more. Please like and comment. That'll help my videos show up in more people's feed and help me share the wealth of knowledge that I'm trying to cast to contractors across Canada. Thanks, guys.